Good morning. Well, as expected and promised, there were no major changes for corporation tax. The Chancellor introduced a corporate tax roadmap with an aim to provide stability and predictability to businesses and investors. The roadmap set out a number of commitments, including capping the main rate of corporation tax to 25%. For capital allowances, the full expensing allowance is to be maintained, along with the £1 million annual investment allowance, current writing down allowances, and structures and buildings allowance. There was one major change relating to the treatment of double cab pickups, which from the 1st of April 25 will be treated as a car. This means that they will no longer be eligible for the full expensing or relief via the company's annual investment allowance. The 100% first year allowance for electric vehicles and charging points has been extended until 31st of March 2026. R&D, again, the current relief and rates are being maintained. There are continued plans to minimise the number of mistakes I'll say, being made in these claims by continuous improvement of the guidance available and looking into widening the provisions of advanced clearance for these. There's good news for those in the film and TV industry. The tax relief for visual effects is set to increase from the 1st of April 25 from 34% to 39% of qualifying expenditure incurred from the 1st of January 2025. Moving on to employee ownership trusts, in an aim to drive best practice in relation to the sale of businesses to a trust, there's been a tightening of the governance and compliance rules in relation to these. These changes apply to sales of businesses from the 30th of October 2024. Moving on to the international matters, the transfer pricing rules continue to be under review. Areas being considered include potentially lowering the threshold for exemptions to these rules and introducing a requirement for multinationals to report cross-border related party transactions to HMRC. The Pillar 2 rules, which are aimed at worldwide groups having turnover of €750 million or more, but having a UK presence, and the aim of this is to reduce the ability to move profits around different countries with an aim of minimising their tax. So Labour will continue to ensure that the UK domestic rules reflect those agreed internationally. Anyone involved with these will know that the rules are extremely complex. The roadmap states that there will be consideration of opportunities for simplification and rationalisation of these. Well, I think Phil thought I'd got off a bit too easy when deciding which slides we'd present. So the big one, national insurance. Sticking to Labour's manifesto pledge, there was no increase to the national insurance contribution to the working person. Conversely, sparking much debate is the increase to employer national insurance contributions, being the single biggest tax raising measure outlined in the budget, expecting to raise £25.7 billion per year. Employers' NIC rate is set to increase by 1.2% to 15% from April 25. The earnings threshold, the secondary threshold upon which employers' national insurance contributions is payable, is set to be reduced from £9,100 to £5,000 from April 2025 until April 2028. The Office of National Statistics has published that this measure will represent an increase of nearly £900 Class 1 national insurance contributions per an employee based upon the average worker's total pay. Looking for the positives, the employment allowance, currently only available for smaller businesses, is to be increased from £5,000 to £10,500 in April 2025. The prior year £100,000 contribution threshold restriction will be removed, meaning that larger businesses will now also be able to claim this allowance. Moving swiftly on to PAYE employment benefits. Electric vehicles have been a cost-effective way of providing a company car and can be seen to remain the case into 2029-30. The government is set to publish draft legislation related to loopholes in car ownership arrangements with aims of not paying company car tax. This measure will seek to level out the playing field. The changes will take effect from the 6th of April 2026. Double cab pickup vehicles with a payload of 1 tonne or more, after much debate, once again to be treated as cars for certain taxes, from the 1st of April 2025 for corporation tax and the 6th of April 2025 for income tax. These vehicles will be treated as cars for the purposes of capital allowances, benefit in kinds, and some deductions from business profits. The mandatory payrolling of employee benefit in kinds will go ahead as planned by the previous government from April 2026. And finally, stamp duty land tax. The existing high, I moved on a bit too quickly. The existing higher rate of stamp duty on the purchase of additional residential property by an individual will increase from 3% to 5% for transactions with an effective date on or after 31st of October 2024. This will also apply to the purchase of a residential property by a company that is not liable to the single rate of stamp duty land tax. The single rate of stamp duty land tax that applies to purchase of residential property for more than £500,000 by a company in England or Northern Ireland, and which is not intended to be used for certain commercial purposes, will increase from 15% to 17%. I think that's it from me, and